Hi everyone, my name is Peter Pakulski. Today we have a final overview of a massage business idea financial model. So today I'll be showing you the whole model and I will be giving you all the links how I created this financial model from scratch in the description of this video so you can travel through the whole process. Also, I will be giving you at the end screen of this video, I will be giving you the link to the playlist where all these videos are located. So maybe this video will be useful for you. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. And today I would like to show you what are important things you have to worry about when you create financial model for massage business idea or any financial model. So first of all, we start with creating a rule that all our inputs are colored with specific color. So in our case, we take blue color. This is the color of all our inputs, like this, like this, like this. So this is done because of convenience. So when we are done with financial model, we will start playing with scenario modeling. You will be playing with scenario modeling. Your partners will be playing with scenario modeling, and everybody who will be involved in this process will have to find the inputs easily, and coloring the inputs with specific color make this process easy, so they will be able to find all your inputs easily. So this is the first important thing. Then when we start our financial model, we create the list of different types of massage that we are going to offer to our customers. And what is important, we are creating on-off buttons so many steps ahead when we will finish this financial model, when we will see for example, the payback period of our business idea, the net present value, the profitability index of our business idea, or when we see the cash flow statement. Here it is. So when we see the cash flow statement, we will 100% want to, for example, switch on and off different services. For example, for example, we made some optimistic assumptions that we will be having this type of massage, and I can switch. So first of all, let's look here. So these are this is the financial efficiency with this service in our project. We can simply switch it off, then go back to the financials and see what are the financials if we switch the service off from our calculations. And if we are too optimistic, we will be able to see what is the difference in cash flow if we switch off or switch on this or that service. So all this has to be done during the process of financial modeling. So you are creating the possibility of scenario modeling during the creation of the model. So this is very important to have this on-off buttons to the input, to the main inputs, to make you be able to play with all this stuff during the scenario modeling many steps ahead in the future. Then we specify the pricing for our different types of massage, and then we create the coefficients, local coefficients, for example, for specific massage, or we have a global coefficient for all prices. So for example, we can, for example, this is the simple and discounted payback period with basic scenario, but for example I just want to decrease the pricing and take only 80% of the basic prices. So I'm just doing using these coefficients instead of playing with inputs themselves. So I'm going back here. I'm just waiting for the
and see how stable my business idea is
when I'm playing with this
coefficient. Or I can play with, for example,
local coefficient. So I would like to,
for example, increase these prices on 20%
and take, for example, 70% of these prices. So I'm done with that. I'm going back to the diagram. I'm just waiting for update of the adjustments that I did, and all this is valuable when you are done with all inputs and you just want to play and see which parameter affects your business idea in which way. And this is very valuable, so you can play with pricing, you can play with direct expenses. You have the same coefficient, local and global coefficient for direct expenses. Then you specify the duration of this or that type of massage. You have local coefficient, global coefficient. So you start playing with the scenario analysis from this block of inputs. Then you need to create the credible revenue generating algorithm that you will trust, because if you just specify how many massage services you will be offering per month, you may specify the amount of services that you will not be able to offer. And this is the critical mistakes, because you will get the revenue that you will never be able to get. You will get the profit, incorrect profit. You will get the incorrect simple discounted payback period. That's why we started with specifying the services. That's why we introduced the parameter of duration of services when we offer. And then we specify from Monday till Sunday, we specify the amount of working hours per day in our massage salon. And then we are taking the typical week. So here is the day of the week: Monday, Tuesday, Wednesday, Thursday, and so on. And then we start specifying the amount of services and which services we are going to offer, for example, on Monday. So for example, I can go here and let me unhide. So let me, for example, add a service here. So if I add a new service here, I can see how the revenue for Monday changes. The level of time occupancy with services for Monday is changing. And for example, we can add some another services. So we can see when we are adding services for Monday, we can see how the revenues are changing, are growing, direct expenses are growing, time occupancy is growing in hours and in percentages of working hours. And when we are doing like this, when we're specifying the inputs like this, we are thinking if this revenue for Monday is real. So when we do it another way, usually when we if you ask the entrepreneur, any business starter, just how many services you are going to offer monthly, he will tell you that, for example, he's going to offer 100 services per month. But if you start specifying the amount of services like this, you will see that in 99% of cases you won't be able to reach these 100% services per month. You will be able to reach only, for example, 75 or 80 or even 60 services per month if you start specifying the amount of services, allocating them inside the typical week. And then after allocation of services like this, you will trust these algorithm, and when you see the revenues, you will understand that you can really reach these numbers. And this is very important for your business idea. So this is vital. So that's why we are creating the revenue algorithm like this for massage salons. So we are adding service by service, creating the portrait of services for Monday, Tuesday, Thursday, Sunday, and so on. So this is the way we are doing it. Then when we create the revenues, then we add seasonality coefficient. So for example, we may have some decrease in revenue, for example, in summer months. Here it is. And this seasonality may or may not create the operating losses. So for example, if we go to cash flow statement, we can see that. So for example, in July here we have operating losses, and we need to be prepared for these losses. And to calculate the right revenue, we are introducing the seasonality coefficient for the typical year. So once we've created the portrait for the typical week, then we create the revenue for each month, and then we add this seasonality coefficient. Then the next input, so we are setting up when we get the first revenue. So we are specifying the year and the month. So this is the place where all the project starts. Then the next important thing is that when we start in May 23, we are not able to reach the target revenues right from the first month of operating activity. So when we start in May 2023, we are not able to, we are assuming that we are not able to reach the target revenues right from the first month of operating activity. And we are assuming that, for example, we are so in May, here our revenue is 73k, but during the first May, when we start operating activity, we will get only 10% of this value. So we will get around $7,000 revenue. And this is very important because this is the reality, first of all. So we can play with these numbers, with the speed of reaching the target revenues. So these are the targets with seasonality. and this is the pace of reaching these target parameters. Why we need these inputs? So if we go to the cash flow statement, so this is May 2023, these are the investment stage expenses, and we can see, so during the first several months here we have an operating losses, and these losses we need to add to these investment stage costs to get the total amount of financing that we need to start the business. So the amount of financing that you need to start the business will be different depending on the speed of reaching these target revenues. And playing with this input, you will be able to see bad, basic and good scenario of investment capacity for your business idea. So for example, here you can place 30%, 50 and 100%. This will be one scenario. For example, another scenario will be you can specify like 5, 7, 10, 15, 30, 50 and so on. So this will be another story, and you will be able to see another amount of money that you will need to start this business. So you can play with this number and see how the amount of financing differs in this or that case. So it is very interesting exercise. So when your model is ready, you can play with this input. This is very important, and you will be able to see how stable your business idea, how much money you will need in this case, in that case. Then we are specifying the investment stage cost. So this is May 2023, and before this month we are specifying, before this month we have 2 months long investment stage. So then we specify what we are investing in and how much we are investing in and when. So this is the investment stage expenses. Then we have the fixed costs that are stable. So this is the list of fixed costs, for example, rent, office expenses. So this is the list of expenses, and this is their values, monthly values. This is the fixed cost. Then we have a payroll. So this is the amount of different people, their positions, amount of people on each position, salary per person per month on each position. This is the monthly payroll. Then we specify the amount of loan, if we do have any. So what is the amount of loan, what is the term of the loan in months, what is the interest rate, if we have some grace period for principal payments or grace period for interest payments, we can specify it here. Also we can then we specify when we take this loan, year and month. Then we specify the tax rates, and then all this story moves to cash flow statement. Here it is, and here we can see the profits monthly, how the project breathes itself without external debt payments. So this is the profit monthly without interest and principal payment to the bank. Here we can see, for example, how much financing we need. So these are our money, this is the loan. If we look at the last line of the cash flow statement, we will be able to see when the project starts generating its own cash. So we're searching for, so since October 23, November, the project starts generating its own
cash, and we don't need to put extra financing in it.
So then so we can play with different scenarios with inputs, and see how the amount of money differs from in this case, that case. This is very interesting process. Then we on the next tab we are creating a very simple table. For example, these are the revenues, these are total expenses, this is the profit, this is the level of profitability, just to make you explain for yourself how profitable, what is the actual value of the profit of the project. So this is very simple. So revenues, total costs, profit level of profitability. Then we create two diagrams just for scenario analysis, simple discounted payback period. Then we create a tab for, here we specify the discount rate and the step of changing the discount rate to calculate internal rate of return that will be needed for scenario, for sensitivity and scenario analysis. And here this is a magical let's say tab where we can test our project. So here we can add this coefficient to any input in our model and see how the financials are changing if this parameter increases or decreases with a specific step. So here is the step where step is equal to 20%. So we can adjust it, for example, to 10. And for example, we can go to the model. We can go up. For example, we have this price for massage type number 15, and what we can do, we can press equals and multiply on the sensitivity coefficient. So we are adding this coefficient to this parameter. Then we press enter. So now this coefficient is added. Now we can go to sensitivity tab and press sense button, and then we will be able to see how this parameter affects our business idea. So let me show you. So here we can see how, so if the price for massage type number 15 will decrease on 50%, so this will be the simple discounted payback period. So this will be the amount of financing that we will need to start the business. So we can also for example increase the step of changing parameter. We can, for example, we can delete this parameter from here, and we can go to, for example, direct expenses and add this coefficient to global direct expenses, to global direct expenses. So now this coefficient has been added, and now we can test our business idea from the point of increase or decrease the level of direct expenses inside the price. So then we just press the sense button and we will be able to see the results. So now we can see, so we can add this coefficient to any parameter of revenues, expenses, and so on, and see how this parameter, how increase or decrease of this parameter affects the financial efficiency of your business idea. And it is really very interesting, because you will be able to see your project, how your project is stable for the first time in your life. So you're getting to know your project better and better. And usually people who start the business create a huge amount of scenarios. They are testing different inputs when they create the final version of business model that is put into life. So that's why I decided to show you this financial model. Maybe the information I was showing you was useful for you. I will be giving all the links on the process when I created this financial model from scratch at the description of this video. Also, I will be giving the link at the end screen of this video to the whole playlist where this process is allocated. So like, share, subscribe. You can always order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.